Welcome, traders, and welcome to the SPACs Attack. Let's get it started. How we doing, traders? How we doing? Welcome to the SPACs Attack, where everything we talk about is SPACs. And I'm going to bring on my man to the show. You guys know him as Chris Opedia, but I know him as Chris Catchy.
What's going on, brother? How we doing today, Mitch?
What's going on, man? Super excited to start this day. Got the investor presentation and call playing behind me. We have a great interview today, guys. Stick around. We're going to be going through Sharecare, and it's going to be super exciting to get into some of the telehealth here and also the health industry here. So, Chris, how was the weekend? Did you enjoy it? Looks like you hit some upgrades. I don't know if you guys enjoy that, but definitely smash the like button if you think Chris improved that video game right here. What's up, Chris?
Yeah, I got some blue behind me here. I feel a little bit like maybe I could tell you what the weather's going to do if I change this to green, but we can play around with some colors. I got this nice new background back here, so super excited. Super excited for the interview today, and then, we missed you guys. No show on Friday. We had our second quarter meeting. Benzinga has so many exciting things coming. I'm super excited. I know you guys will be too, our raving fans out there. But yeah, super excited. And, we have some rumors over the weekend and also from Friday, that we didn't have a chance to get to, and then some news items out there as well. But no new deals announced today. It's Merger Monday, and I thought for sure I would wake up and see, a couple deals, but nothing out there today.
Yeah, we're definitely going to be working out to see if the deals come. But one of the things is that's a good sign, Chris. That's a sign that we can focus on some other SPACs, right? And then also investors can take their moment here. Instead of looking for what's the next, they can focus on what's already come out, and maybe we can find some plays there. But let's go ahead. Let's get into our headlines of the day. And like always, guys, hit the subscribe down below. If you guys want to be the first to get this SPAC information, then you need to join our SPAC newsletter. Look in the description below, and let's go ahead. Take us back to the headlines.
All right, guys. Yeah. So like I said, no new deals announced today. We do have, some headlines and then also a couple rumors to cycle through. Up first, I want to talk about some sports SPACs. So there was a conference held last week where several of those SPACs targeting the sports industry had presentations, had a little Q&A session. So shout out to Sean J. Hustles on Twitter. That's official Sean, SHAWN. He was live tweeting the event, and I want to share some insight that he dropped. So we have SEAH that we've talked about a lot, sports entertainment acquisition. So the CEO, John Collins, he confirmed that SEAH is staying away from sports franchises. So not looking to acquire a team. Instead, they're targeting a company that values management and skill set that they can bring to the table. And then also talked about how they have gone through 80 to 90 companies now, and they are focused on a handful. Take from that what you want, but to me, the fact that they've gone through 80 or 90 and they have a handful left, I've got to believe that maybe a deal for SEAH is getting closer. So more details on that hopefully soon, but definitely keep an eye out on that one. Then Jason Robbins, who, of course, CEO of DraftKings, he is also attached to a couple SPACs. He talked about the sports SPAC industry, and one of the things he said was Fanatics is really being targeted by SPACs right now. Fanatics, of course, a sports apparel and memorabilia company. So look for that one. They've got several exclusive deals with some of these sports leagues. They're one of the largest out there. So, if one of these SPACs can land Fanatics, I think it would definitely get some attention. And like I said, several sports SPACs out there. And then RBAC, Red Ball, with Billy Beane of the Oakland A's. So he also spoke at the conference, and he said that he ultimately wanted to own a team, but because they're a public company, he kept his comments brief. So no new news out, but the fact that he said he's always wanted to own a team, I've got to think that RBAC is still looking for a sports team ownership with this SPAC. But again, just my opinion there. And then this morning, we have VCVC, so that's 10X Capital Venture Acquisition. They announced so their partner, Re Automotive, announced a partnership with Magna, that's MGA. So Magna, of course, who makes vehicles for other companies. They have that deal with Fisker. We've talked about them before. So Re Automotive is going to partner with Magna with a mobility as a service venture, and then also their modular electric vehicles. Remember, we had them on the show not too long ago. So they're creating that base that electric vehicle companies can build upon. So the fact that they now are working with Magna really opens up their venture for more and more partners to make those electric vehicles. So Re is doing the groundwork to get those vehicles made, from the ground up, also with, the braking systems and other items with the wheels. So keep an eye out on VCVC. Great news for them here, that partnership with Magna. Then one of the SPAC deals that was announced last week, we have MUDS, MUDS, taking Topps public, right? Well-known trading card company. So part of their investor presentation was all about NFTs, right? Talking about non-fungible tokens. So news out today, they officially are going to launch this month. So with Major League Baseball, a NFT series on April 20th, they're going to sell them in packs similar to trading cards. So a standard pack will cost $5. I think it contains 6 digital cards. And then a premium pack will cost $100 with 45 cards. Different tiers too. We're going to see cards that have, 50,000 copies all the way down to 1 of 1 exclusive premium copies. So this is kind of a hybrid between digital cards that they were already doing and then NBA Top Shot, which is selling the NFT moments. And they have some, that are numbered all the way down to 49 or 99 and some numbered out of 35,000. But they also have announced that they'll have 1 of 1 soon. So I think this is going to be well received. We'll find out later this month. But Topps is going to get a lot of play here as an NFT play. They already have those deals with these sports leagues, so keep an eye out, MUDS. Then SPFR, which I do own shares of, more shares being added to ARCX, the ARC Space ETF. So keep an eye out on this one. It is a new favorite of ARC and Kathy Wood, a 3D printing play going public. So definitely, on your watch if it is not. And then another one I want to highlight, which I also own, we have Slam U. This is the SPAC from Alex Rodriguez, and it also counts Mark Lohr as a strategic advisor. Mark Lohr previously with Walmart and Jet.com. So over the weekend, news was out that Alex Rodriguez and Mark Lohr are purchasing the Minnesota Timberwolves of the National Basketball Association. So A-Rod had previously told Bloomberg that he was trying to create the Yankees of SPACs, but wasn't looking at sports franchises. So not sure what to, expect here. Is Slam U going to be involved in the Timberwolves purchase? I think we'll get more clarity this week. But the fact that A-Rod and Mark Lohr are both on board with this SPAC, I have to think there's at least consideration there. Again, I do own shares of Slam U. It's still trading as units, but keep an eye on this one as, we move through that Timberwolves news. If this SPAC is involved, you would get that sports play that everyone has been wanting with some of these sports SPACs as far as team ownership. So keep an eye out. And then turning to our rumors, So we have Israeli company Autotalks is in talks to go public via SPAC at a $2 billion valuation. This is a company, that's well known over there, not so much over here in the U.S., but they have strategic contracts with Volkswagen and Toyota to install their chips in future models. So definitely worth watching. And then also working with Chinese authorities for their technology based on 5G networks in Chinese cars over the next 3 years. And then Israeli chipmaker Valens also in talks to merge with the SPAC. No tickers identified. Valuation of 1 to 1.2 billion. That rumor coming from Calculus. The thing that obviously with these two SPACs is similar is they are both Israeli companies. So of course I would highlight BTAQ, which is a SPAC I own, which specifically mentioned Israel in their SPAC presentation. So maybe they will land one of these companies that is now being rumored. Impossible Foods is exploring a IPO or SPAC deal. I have an article up on the site where I listed, 12 SPACs that could be, in play for Impossible Foods. Just to run through them quick, we have NOAC, which is targeting the food sector, and their CEO, Sebastian Castigliano, is well known in the food community. He created several companies. Then we have JCIC, another one targeting the food sector. Star Peak Corp 2, STPK, is targeting sustainable food or agriculture companies. And then Better World Acquisition, that's BWAC, targeting healthy living and strong ESG. And then just to throw out there, Serena Williams is an investor in Impossible Foods. She did work with Barry Sternlicht on that SPFR deal. So, maybe Barry Sternlicht can get Impossible Foods with one of his SPACs. Also, Khosla Ventures. Khosla is a major investor in Impossible Foods. They have several SPACs out, KVSA, KVSB, KVSC, and KVSD, but those were all targeting the technology sector, so probably not in focus here. And then given the size of Impossible Foods, you could also throw out some of the larger SPACs like a KKR acquisition, or Eris Acquisition Corp, AAC. So just keep those on your watch. And again, that article is out on the Benzinga site, Impossible Foods. But again, we could just see a traditional IPO instead. Then the big rumor last week, Soaring Eagle, SRNGU, which I do own shares of, in talks with Ginkgo Bioworks, a company that prints DNA and creates genetically modified food. That's according to Bloomberg. So again, this is a SPAC that raised over $1 billion. The deal here could be worth over $20 billion for Ginkgo, which was founded by MIT scientists. They have several, business segments. They also work on the manufacturing process for RNA. So they've been linked to COVID-19 vaccines, health and biosecurity. Their Concentric division is offering pooled testings for schools. Their Joyan Bio is a joint venture with Bayer, which is working on agriculture segment. They also have Motif Foodworks, which is working on, plant-based foods, meat alternatives, and dairy alternatives. They also have partnerships with Twist Bioscience, Berkeley Lights, and Kronos Group. This is a big one. And again, those big business segments, they count T. Rowe Price, Bill Gates, Bailey Gifford, and Illumina as investors. And then that Motif Foodworks segment, which is a subsidiary, also has investments from Bill Gates, Jeff Bezos, Michael Bloomberg, Richard Branson, Ray Dalio, Reid Hoffman, Jack Ma, and Masayoshi Son. So some of the biggest names out there. So keep an eye out. SRNGU, Soaring Eagle. And then Mitch, as we talk about, the SPAC market, has it bottomed? Has it not? Well, no new deals announced today. The tweet I saw from Julian Klimachko over the weekend was the first 9 days of March, we had 44 SPAC IPOs. The first 9 days of April, 7 SPAC IPOs. So definitely, a big change of pace there in new offerings in April versus March. So what do you think, Mitch?
Yeah, it's exactly what we wanted to see, guys. We've been talking about how we want to get that number down. Reason why is we want investors to get a chance really to take a look at some of these companies and slow the kind of supply and start getting that demand back to where we need it. I think you're starting to see it. You've been seeing some stocks hold their gains, and I think this is the important part. It's not only that we're getting some gains, but we're also holding those gains. So definitely keep your eyes on the SPAC market. I'm going to be interested in seeing what SEAH grabs. You guys know I've been mentioning that one since I think since October, really, in 2020. So I'm going to keep an eye on that one. I don't have it anymore in the portfolio. When I went to cash, I kind of dropped that one off. Might pick it up again in the next couple of weeks, but we'll be interested to watch how these SPACs react as we're starting to see some kind of bottoming action. Okay, let's go ahead and let's take a quick look at our watch list before we bring on Jeff Arnold. I know you guys are probably out there waiting for that interview, so let's go ahead and take a quick look here. One that I'd mentioned, of course, is Pine Island. This one's starting to get on my watch. Why, guys? Because it was one of the most favored at first. When this one first came out, it kind of went up towards a level of 1450. This one's on my radar because now you're having these multiple bottom looks off this $10. It's getting interesting for me, and that's Pine Island Acquisition. What's the target here, Chris?
Yeah, so Pine Acquisition has not announced a SPAC deal yet, but again, defense, government services, and aerospace. You have the former CEO of Merrill Lynch. You have some big names attached to this, especially in the financial sector and in the defense sector. So this is one I've liked for a while. The mover I'm seeing out there, Mitch, is MUDs. As mentioned, taking Tops public, MUDS up about 5% today. This one had good momentum last week on that deal announcement. So I'm curious to see, now with the NFT news officially being out, again, no surprise. They already had NFTs for, Garbage Pail Kids, Godzilla, but those aren't as big a names, right? But then we look at Major League Baseball, and they're going to sell packs of NFTs. This isn't a company just listing NFTs, as a press release, even though they never have done them. This is a real company with real, partnerships, and I think could be a good long-term NFT play, but also, sports cards, the growth there in digital sports cards. So this is one definitely on my watch list for today.
All right, guys, before we bring on our interview, I thought it would be best to go ahead up and share here. Let me go ahead up and grab my application here. I'm just going to share off of this one. All right, guys, I'm going to mute myself while the video's on, but just a little introduction on Sharecare here. Let's go ahead up and see who Sharecare is before we bring on our CEO interview.
Hi, my name is Jeff Arnold, and I'm the chairman and CEO of Sharecare. Back in 1994, started our first company called Quality Diagnostic Services. And what that company was all about is we invented a little heart monitor that was the size of an American Express card that you put up to your chest when you were having symptoms, and it would record your EKG. 1998 rolls around, and we were one of the largest heart monitoring businesses in the country, and started thinking, wouldn't it be great if I could put these EKGs online? So I sold the heart monitoring company and started WebMD. And so we built WebMD up to the largest health destination site in the world.
Difference between a visionary and a dreamer is execution. That dreamers have ideas and do nothing about it, and visionaries have those ideas and execute. And Jeff is one of those people. He's the rare visionary who sees something and knows how to go for it. And he's done it multiple times over.
The company.
All right, guys, you saw it there in the video. We're super excited. Joining us on the show today, we have Jeff Arnold. He is the co-founder, chairman, and CEO of Sharecare, a company going public with Falcon Capital Acquisition Corp. That's ticker FCAC. So welcome to the show, Jeff.
Hey guys, how you doing?
Welcome. All right, so I'm going to go ahead and let Chris do some of his questions, and I'll be back with some of my own.
Great.
Awesome. So, Jeff, just to get started here before we dive into Sharecare, I'm wondering if you can share, some of your background with our viewers. We heard it there in that video. You founded WebMD. You worked at Discovery Communications and, some other big companies. So just give our viewers a brief background of yourself.
Yeah, my pleasure. So my background's in healthcare and technology and media. Started my first company back in 1994, a heart monitoring company that we built up and sold to a public company called Matria Healthcare. Started WebMD in 1998, grew it up to a billion in revenue and early kind of in digital health. Had a company that we sold to ultimately to Ericsson that was on the video on demand space. Had a company called How Stuff Works that you might be familiar with that we built up and sold to Discovery Channel, and started Sharecare in 2012 as kind of like a WebMD 2.0.
Awesome. So Sharecare going public now via a SPAC, FCAC. So, why the decision to go public via SPAC over a traditional IPO, and had you explored, an IPO recently?
Yeah. So we had a board meeting in Q4 and, was looking at all the digital health companies that had gone public in various ways. And, the pandemic, if there's a silver lining, I think it's been digital health and, kind of the emergence of that, and thought, we've got the scale. We're a $400 million business. We're EBITDA positive. We're cash flow positive. We're highly diversified. So we had the bankers kind of make the pitch to the board, and we were kind of set to, go public in 2021. And we started getting approached by various SPACs. And as I started learning about SPACs, which I didn't know a lot about at the time, I got really excited about the idea that you could spend more time with investors in a 20-minute roadshow, that you could show forecast, and projections going forward, that we could accelerate our timing to get public, and ultimately had what we think is picked a great SPAC sponsor that knew a lot about the capital markets, and so we ended up not obviously doing the traditional IPO route, but going the SPAC route.
Awesome. So, one of the things that jumps out about Sharecare in that investor presentation is some of the backers. So, you founded the company with Dr. Oz. We have Oprah Winfrey and Harpo attached. We have Aflac, Quest Diagnostics, Wells Fargo, and Anthem, all as investors in the company. Can you just kind of talk about, the validation and some of these big names attaching themselves to a company like Sharecare?
Yeah, my pleasure. So our strategy for the business is this idea of all together better. So we're all together better when we bring the ecosystem to the palm of the person's hand. So bring the hospital and the doctor, bring the employer, bring the health plan to one spot. We're all together better when we don't have a sea of apps of all these various health apps, but we have an integrated platform. And we're all together better when we go from my health to our health. And in the spirit of all together better, as we were building out our cap table, we said, how do we basically attract investors that bring us into the living room, bring us into the exam room, and bring us into the workplace? And so we started with media companies first, getting investors to help us tap into people's homes. So we got Dr. Oz and Oprah, and as you see on the screen, Discovery and Hearst and Sony. And then we moved to the exam room and said, look, for us to be fully trusted as a brand, we're going to need to be physician accepted. So we got the largest hospital system in the country, HCA, to invest. We got one of the largest not-for-profit health systems in the country to invest, Trinity Health. And then in December, we got the largest health system in Georgia where we're based to invest. So a lot of different hospital partners. And then we said, who pays for all this? And how do we become the digital ally of health plans and others that can get us to the workforce? So we got Blue Cross Blue Shield of Arizona, Blue Cross Blue Shield of Maryland to invest. We got Blue Cross Blue Shield of Hawaii. We got Quest Labs. We got AFLAC. And then you might have noticed in our filing last week, we got a $50 million investment from Anthem, which is the second largest insurance company in the country.
Yeah, that's quite the list of investment partners there. One of the things that definitely stood out to me going through this, in that same slide, also above those investors, we have the three business lines of enterprise, provider, and consumer solutions. Can you just walk us through a little bit of what those three business segments entail?
Sure. So, one of the great things about Sharecare that we think kind of creates this category of one opportunity is we have a really comprehensive platform, right? So, that has lots of products and capabilities, and we take that one platform and we sell it into three divisions. So we have an enterprise division, and in that division, we sell to government, we sell to large health plans and large self-insured employers. So you'd find like the state of Georgia as a customer, or you'd find Delta Airlines as a customer, or you'd find a Blue Cross Blue Shield plan. And then we take that same platform and we sell it into providers. So we have over 6,000 hospital and large physician as clients. And then lastly, our vision from the beginning was, because this is a consumer-centric platform, is you can't spend $500 million on a health platform with a vision to change healthcare and then tell a person that you can only get it if your employer or health plan bought it for you. So we also have a direct-to-consumer offering.
Awesome. So, one of the things that also stood out to me in this investor presentation is the new revenue opportunity with health security. Obviously, we've heard in the news so much about the pandemic and the reopening of businesses, the reopening of, sports venues, concerts, hotels. So Sharecare is involved by targeting hospitality, sports venues, schools, and workplace with that health security segment. Can you just, walk us through what is that all about? And how is Sharecare, how could they be a reopening play here going forward?
Yeah, no, that's a great question. So when you think about our business, think of it that there's three pillars, and one of them is health security, which is emerging. So one pillar is what we call community well-being, where we collect data at every zip code in America, and we rank well-being. So what's the physical health, mental health, financial health of that community? And then on the other end of a pillar is what we call resilience. So that's our kind of core Sharecare platform that we sell to the Deltas and the Blue Cross Blue Shields. And that's, helping people build resilience. And what happened in the pandemic is that we realized there was going to be a new emerging category that was going to come about that digital health companies like Sharecare were equipped to handle, which was health security. And so when we think about health security, we compare it to cybersecurity. Right. So cybersecurity, we protect infrastructure against a virus. Health security is how do we protect people? And so our first step was let's tech enable standard operating procedures so that we can help the world reopen. And so if you're a hotel, or if you're a school, or you're a live event, or you're an office building, or others, how could we use technology to make sure that the environment was safe? And we started with hospitality because we saw there was a great need there. And we partnered with Forbes Travel Guide, which created the 5-star rating system in 1958. And we partnered with Internova that pre-COVID was doing $40 billion in travel bookings, and had them mandate that hotels implement the Sharecare platform so that employees felt safe to come back to work and guests felt safe in attending. And today we announced that the city of Los Angeles has bought the platform for all the hotels in LA. Previously, we announced the destination of Cabo had bought the platform for all the hotels in Cabo. And we've done some live events and some other things. But I think it's this really interesting middle layer that's emerging in digital health, this idea of health security, of making sure that the environment is safe for people and guests. That work led us into the vaccine world. So as we started becoming leaders in health security, we started working with states to help them roll out the vaccine. And we were able to secure the contract in Florida and Georgia. So we've enrolled over 4 million people through Sharecare for shots in arms. And so you see kind of all the opportunities that are emerging with health security, not just, making sure the environment is safe, but, actually helping with logistics and people getting shots in arms and things like that as well.
Wow, that's great. And yeah, we saw that Los Angeles news today. So I had seen, that Sharecare prior deals with W Hotels, Ritz-Carlton, and the State Farm Arena, home of the NBA's Atlanta Hawks. So now you mentioned Cabo and Los Angeles. So, how are these deals happening? Is this where the city of Los Angeles is approaching a company like Sharecare? Are you going out and after these cities? And what does the revenue breakdown kind of look like going forward?
Yeah, so this is a new category for us. I mean, we weren't in this business 4 months ago, but we'll already generate over $20 million in revenue in 2021. So it's meaningful, and it's a combination of charging a hotel or a school or arena an annual fee to be able to use the technology for the verification, as well as working with the states for the vaccine distribution. But yes, the answer is, we have kind of organized ourselves internally around verticals. So we have somebody that is calling on hotels, somebody that is calling on live events. We have a real exciting partnership we're about to announce in that area with similar to what we did with Forbes Travel Guide and Internova for arenas and stadiums. And so, yeah, we're growing this. It's already been adopted. We've verified in over 60 countries in the last 60 days.
Awesome. The other, new maybe area of venturing here, we have the acquisition of Doc.ai, artificial intelligence digital solution, has a deal with Anthem. Can you talk a little bit about Doc.ai here?
Yeah, so, I'm sure you guys talk about AI a lot on your show, and we're real excited about the possibilities of what this can do for healthcare. But Anthem is the largest Blue Cross Blue Shield plan in the country. It represents 14 states, already over 40 million members. And alongside the pipe, when we were raising the pipe, Anthem made a $50 million direct investment into Sharecare. And as part of that investment, we've been working with other partners of Anthem's and got introduced to Doc.ai and got really excited when we started understanding what
Did we lose him there?
It looks like we lost Jeff, guys. So
Jeff is frozen right now, guys.
He is frozen on the screen. We'll see if we can get him back. But otherwise, Mitch and I can hop in here. We can talk a little bit, or I can. So,
Why not just pull up what he was going to.
There it is. Right? Yeah. So artificial intelligence, which that's very fascinating to me, and, to kind of integrate that into digital health. I think is a strong play here. And then also you heard, all about COVID-19 vaccines, the reopening, those deals with arenas, with hotels, and, the deals with the city of Cabo and Los Angeles. So some of these big cities and these tourist destinations, they're partnering with a company like Sharecare, to be able to really get things back to as normal as possible. And Sharecare then, getting the revenue side of things from it. And they're getting, the big partners along the way. You heard Jeff say, those big investors they have. And, that really stuck out to me, and you've got some well-known people like Dr. Oz and Oprah, but, also those big hospital partnerships, right? And the media partnerships. So, that's a strength to me. That deal with the Atlanta Hawks, for their arena being certified Sharecare safe. There's also Sharecare patches on the Atlanta Hawks jerseys. So some good brand awareness there as well. So this is a very interesting one. And the decision to go public via SPAC instead of a traditional IPO, this Falcon acquisition, you also have Jeff Sagansky as part of this team. Jeff Sagansky, the one who brought DraftKings and Skills and several others public, in the other line of SPACs that he has with Harry Sloan. But he's a member of this SPAC, FCAC.
Well, guess what?
Did we get him back?
We got him back, baby. We got him back. Let's bring on Jeff back here.
Hey,
All
sorry
right,
about
Jeff.
that, guys.
Well, hey,
No problem.
welcome back. You know,
I was just sharing information about your company, but I know you can do it better than me. So yeah, let's dive back into the Doc AI. I'm not sure exactly, where you were when we lost you, but just dive in here.
Okay, yeah, I'm sorry about that. We had some kind of surge happen in the building. I went offline for a second, but real quick. So, Anthem is a $50 million investor. They funded last week into Sharecare. They had signed a $100 million AI contract with Doc AI back in 2020, and we got introduced to them, and it was kind of love at first sight. I was like, what AI needs is data, and we have plenty of it. And what we need is insights, which is what AI can provide for us. So we acquired the company, and we've already integrated. It's 77 engineers. They're profitable. They're right in Palo Alto. Deep tech knowledge. I mean, Walter, and Sam are AI pioneers. Narav is now our chief medical officer. Was head of the health department in the state of New York. Was COO of Kaiser Permanente in California. Their CTO was CTO for Human API. I mean, just a really exciting pickup for us. And not only is it enhancing our relationship with Anthem, but we're taking all that AI expertise that has been, perfected over the last couple of years, working with the largest blues plan in the country, and then taking it to all our other clients as well.
Awesome. So I want to dive a little bit into financials here. So, another positive for me in the investor presentation was the discussion of a recurring revenue model for many of the business segments, which helps provide sustainable and easy to forecast growth. Can you just talk a little bit about, the recurring revenue and how that's easier to forecast some of these projections going out?
Yeah. So, I think what's exciting about our business is the scale and the reach. So we'll surpass 400 million in revenue, this year. We're EBITDA and we're cash flow positive. And when you start to look at our divisions, if you look at enterprise, we're 227 million in that one division, fully booked for the year. Our contracts are typically 3 to 5 years, so they're recurring, and we get paid a per member per month, as well as we have all these upsell opportunities. And so if you're Blue Cross Blue Shield of Arizona, or you're Blue Cross Blue Shield of Minnesota, or Blue Cross Blue Shield of Maryland, or your State Farm for their 150,000 associates, or Delta for their 70,000 employees, we get paid for all those people on a per member per month to have access to Sharecare. And then we have all these digital therapeutics on top of that we upsell. In the provider space, I mentioned that we have 6,000 clients. That division exceeds 100 million in revenue for us. We've grown it from, I think we had 1,000 clients 4 or 5 years ago to over 6,000 now. And this year we'll collect over 4 million medical records for people. So you can come to Sharecare and you can say, my medical records are scattered all over the United States, and with your consent, we go and collect those medical records for you and then deliver it back to you. And so that's all, that's a real steady business for us. And then on the consumer side, we've been in the digital health arena since the late 90s. So we've got a lot of great relationships with pharma and biotech companies. And so they run campaigns with us and love Sharecare because the quality of our audience and the data that we have, and with the consent of our users, how we present them information.
Awesome. Yeah. So, I see the projections. We have revenue of 396 million fiscal 2021, 512 million fiscal 2022. I guess, how do we reach those projections? How much of the new ventures, as far as the arenas and hotels and reopening, and also Doc AI, how much of that is built into the projections?
Yeah. So what's exciting is very little, and so Doc AI is not in those numbers, and health security is really tiny in those numbers right now. So those are big opportunities for us. So those numbers are all organic. So they don't count any acquisitions. We've made 17 acquisitions as a private company. So we're pretty good at buying businesses and integrating it. And health security is very small in those numbers.
Awesome. And then I just want to ask a little bit. Again, you have several business segments, so I'm sure you have competition among all of them. But can you just talk a little bit about maybe who some of your larger competitors are and how Sharecare really differentiates itself from them?
Sure. Yeah. So we have a comp set that you see on the screen here. So when we look at digital health companies, often we'll get asked about Accolade. And one of the things we're doing in our partnership with Anthem that we've announced is that we're building a multi-payer advocacy solution. So we get asked about Accolade, and then you see Amwell and Teladoc are telemedicine companies, and so we have virtual care aspirations as well. But we talk a lot about being a category of one, that we have competition at every capability that we have. So a minute ago, I was talking about medical records, retrieving that. We have a competitor for that. Or I was talking about what we do, say, for Delta's 70,000 employees. We have a competitor for that. But we don't see a direct comp to how diverse Sharecare is. One of the ways that we've been able to win a lot of Blue Cross Blue Shield plans is we often talk to those Blues plans that Blue Cross Blue Shield plus Sharecare is an interesting alternative to a United Healthcare and Optum. And so that's where we try to draw comparisons with our clients.
Awesome. Looks like Mitch wants to hop in with a couple questions now before we let you go, Jeff. So I'll turn it back over to Mitch here.
Great.
Of course, Jeff, one of the things that I'm paying attention to, and I'm sure a lot of investors are, is the transition into 5G and how this could really come into play with your business. How is the transition and maybe the further outlook on 5G? How's that going to come into play with your technology?
Yeah. Well, one is that, we've always thought that the smartphone is potentially the greatest healing device that we've ever seen. And so our business was kind of built on the back of that idea. But when we look at 5G, we look at this idea of like, how do you go from the cloud to the edge? And so that all the data now lives on your device. And once it's living on your device, how do you implement zero trust in scale so that people are confident that they can interact with the platform and know that their information is secure? And we think building trust is a really big piece of getting the healthcare to move from episodic to everyday. So how do people start to interact with their health on a daily basis, not just when they're sick? So trust and zero trust will play a role in that. But the promise of federated learning, I think, is enormous for Sharecare. So when I think about what Sharecare could mean as a brand 2 years from now because of 5G, is this idea that I share my data with Sharecare because I want insights for my health, but I'm also sharing my data because I want to contribute insights for our health. And so how do I train AI models about food by taking pictures of what I eat every day and optimize my diet? Or how can a picture of my face tell me my BMI and my mood, just as a selfie, start to train me for mental health reasons? We just published a study on environmental allergies, of training AI models about environmental allergies, but ultimately really modernizing clinical research. So in healthcare, there's a giant industry called CROs, which is clinical research. And we think this idea of optimizing my health to optimizing our health on the edge because of 5G, ultimately to stand for what Sharecare means, is that I'm contributing my data not only for myself, for humanity, offers an enormous promise for the company and massive revenue opportunities as we look to modernize CRO approaches.
Yeah, definitely. One of the things that we'll definitely pay attention to is the transition in 5G and how quickly we adopt that to, let's say, our mobile phones.
Yeah.
You mentioned a little bit about it. How do you go ahead and protect the data that is shared? And also, how are you guys focusing on the security of that platform?
Well, it all kind of, comes back to trust. So we make a lot of investments in protecting data. And so we get data 5 ways. So we get self-reported data. So we've had almost 50 million people take the RealH test. We get device data. So when you join the platform, we encourage you to earn what we call a green day every day. So we're tapping the accelerometer to count your steps. We're using sensors to track your sleep. We're using the fractal pattern in your voice to look at your stress. We ingest claims data. So if you're an enterprise client, so if you're an employer or a health plan, we get your medical claims, your pharmacy claims, and your lab claims. And every time you fill a prescription, say, at the pharmacy, we update that inside your app. We get social determinants of health data. So we've been a real leader in understanding that your environment is as important to your health as your genetics, your lifestyle. So we're profiling every zip code in America. And then lastly, we'll collect over 4 million medical records this year. So we get lots of data, and we put a lot of effort into making sure that, we secure that data. And, one of the things that kind of drove us to the acquisition of Doc.ai is to push us towards this zero trust. And, and how do we start to give data ownership, to the person on the device.
All right, so I want to go ahead and bring in one last question here. It was a little bit about what you were speaking on a little bit earlier. How does the well-being index come into play, and how could we really use this to kind of advance our own health?
Yeah, no, it's a great question. So we've invested over $80 million over the years, and way before COVID, was really focused on this idea that your environment is as important as your lifestyle and your genetics. And so every year, we publish our index out, and we look at every zip code in America. So think of Sharecare sitting on data. This comes from Sharecare data, where we kind of know the heartbeat of America. And then we use that data to create interventions, as well as to benchmark the effectiveness of Sharecare. So I'll give you a quick example. In the state of Georgia, Georgia ranked 31st out of 50 states in well-being. And we met with the governor and we said, here's what the data says. And we have reverse engineered the data. And we think that we could get to top 20 within 3 years if we take these measures. But this is going to take leadership, and we're going to need you to go first. And so the governor of Georgia enrolled 650,000 state health plan members. So these are 200,000 public school teachers and others into Sharecare. And then we use that as a catalyst to create what we call the Sharecare movement. So once we had the governor, we went and we got Centene's Medicaid members, we got Humana's Medicare Advantage members, we got Delta's employees. We created an innovation hub with Emory. We got the largest health system, Wellstar, to make a $10 million investment, put their 25,000 employees in, and set on a vision to prescribe Sharecare to 1 in 6 Georgians. And it was all around the data of the well-being index. Is like, how do we invest in people, places, and policy to improve well-being and tech enable it and be altogether better? And so that's one of the ways that we use the well-being index.
Awesome. So Jeff, we've got a couple questions here from the chat before we let you go. This first one, I know you're not going to be able to give a specific date, as I don't believe that's been issued yet, but is the merger still on track to close in the second quarter? That question is from Franco in the chat.
It is. Yeah. So we just got comments back and filed last week, and we're tracking.
All right, you guys heard that here. So it's still on track to close in the second quarter. And then our last question here from Chris in the chat. Does Sharecare plan on doing more acquisitions after the SPAC merger is completed?
Yeah, I mean, I think, acquisitions is kind of a core competency of ours. And what's great is we've got kind of a try before you buy. So often we'll partner with companies, integrate them into the platform, sell it to our clients, make sure we're getting the right outcomes with our users, and then potentially acquire those companies. So we have a record of doing that. We have a record of doing, big turnarounds. So we acquired a company called Healthways a few years ago, and did a big turnaround. It's in the investor deck of what we were able to do with that company. But what's great is kind of the guesswork is kind of out of our acquisition strategy, because we have so many clients now, and we work so closely with our partners. It's, really understanding what the market needs inside the Sharecare platform, and then making an evaluation: do we build or buy? And I imagine we'll continue to do what we've always done, which is a combination of both.
Awesome. Jeff, I've got to tell you, we've got some excited people out there in the chat watching this interview. I saw several say they own the stock. Several more saying they were going out to buy shares of FCAC, based on this interview. So we're so happy, to have you on the show to share some insight into the company. So again, guys, Jeff Arnold, the co-founder, chairman, and CEO of Sharecare. Company is going public with Falcon Capital Acquisition, ticker as FCAC. Thank you so much, Jeff, for taking the time out of your busy schedule to join us on SPACs Attack today.
Yeah, no, thanks for everything you guys are doing. Appreciate you having me.
Thank you so much. Have a good one. That old mute trick, Mitch.
The old mute trick. You guys heard it there. Like always, guys, we're getting to the executives that you guys need to hear from so that you can get the information to go ahead and be the informed SPAC trader. Definitely, guys, smash the like button if you got some value. I know I see Daryl there hitting the like. You guys already know. Born to be free, smashing that like button. You guys support us as we support you guys in getting these interviews, and you're not having to pay. You're not having to look at all the information all over the place. We get you one-stop shop for everything SPAC. So do us a favor and hit that like button, hit the share button, let everyone know about this company, because if we all know, technology and digital health is just starting really to take off, and I'm really going to keep an eye out on this company.
Yeah, I saw a lot of positive comments in the chat, and full disclosure, guys, I own shares of FCAC. I have been in this one since the deal was announced. Sharecare, to me, again, the big growth driver, and again, you heard Jeff say it's not really priced into those projections, is the reopening play, right? The certifying of these venues, these cities. The whole city of Los Angeles today was announced, and they approached Sharecare. You heard Cabo, these hotel chains. So, as we reopen, right, and people want to feel safe, they're going to look for items on these businesses, on these hotels, on these arenas that say, hey, we're taking this serious. We're doing these precautions. We've screened, and we're Sharecare certified. That's a big thing, and it's a new form of revenue for a company like Sharecare going public right now. And then that Doc AI, acquisition and integration using artificial intelligence also really isn't priced in. And then Chris, thank you for your question in the chat, about acquisitions. I had to believe that, yes, more acquisition are going to come. As you heard Jeff say, they've done 17 acquisitions, recently. So to me, I think they're going to keep expanding, right? Grow the different verticals and get into new business segments. So this is one that I really like for the long-term digital health. What do you think, Mitch?
Yeah, long term, at the end of the day, it's like I mentioned, this is going to continue moving forward. What I wanted to question, and that's why I questioned, guys, was the 5G. How does that make things different?
That was a great question.
More broadband for kind of to get to that next level in this platform? Because really I'm focusing on how 5G is going to change these technologies. I really think that we're just starting to see 5G come into play. And with that being said, what is going to come from that is going to be a help on this thing we have close by, our phone, right? And so what kind of products and services come out of that? And what can we do now that we have this great broadband speed? And so it's going to be interesting to watch. I thought it was interesting, doing things like tracking your own health. I don't know about you, Chris, but I think this is really something that's going to go on and take off once there really is one over-the-top, let's say, platform to monitor your own health. And I think everyone would want to monitor your own health. One of the things that I see often is a lot of people get to the point where they haven't gone, let's say, to the doctor in like a year or something like that, or over a year. And then a lot of the times you want to go ahead and start, keep an eye on your health. It would be great to go ahead and go to an app that tells us, hey, we're due for that blood test. We're due for this. Let's go ahead up and tick up the exercising. You've been slacking a little bit. Let's go run another mile, whatever it may be. All these kinds of recommendations, whether it be for your actual kind of blood test, whether it be for your fitness health, your physical health, or even mental health. And then all three aspects that are going to be coming into this digital health play.
Yeah, excellent points there, Mitch. I love how it connects everything. I also love, those huge investors and those partners, right? They went after some of the largest hospitals, some of the largest networks. They've got Blue Cross Blue Shield in several states. They've got Anthem. They've got FCAC. I mean, great sign here. And then as several people are pointing out in the chat, I see Carl with a K, Carl with a C, both mentioning this is a SPAC with revenue, right? This isn't about forward looking down the road. When will they have revenue? When will they be profitable? Sharecare is already there.
Yeah, like we always like to mention, guys, where the area is that they can focus on, the targets, and also how many industries are they in. That also gives a play into the revenue. And being mentioned in the chat, of course, a SPAC with revenue. There are some that are out there, guys. One of the things is you got to look. Is this a forward-looking company, like a future look? Or is this more along a company that has been established, that has just been looking for ways to get some more investment money behind them because they're trying to push on the growth? All right, guys, let's go ahead up and take a look at what's moving out there before we get on out of here. We got a couple of minutes left. I got to check on the power hour boys, see how they're running, see if they're running on time. But we'll go ahead up and see what the deal is. It looks like I think they'll be ready. They just need to get that ready. So I'll check on that stream. Chris, anything on your radar out there?
Yeah, what I'm seeing Coupon Boy in the chat right now talking about MUDs and tops. So guys, I would say, some of the top SPAC stocks to buy that are on my watch list for today and this week. We have MUDs, MUDS, bringing tops public. The NFT announcement today for Major League Baseball on April 20th, I think, is just going to be the early innings for them. They have card deals with Major League Baseball, and they can also expand to other sports. They have a partnership with Disney. You've seen Star Wars trading cards. Maybe they can get a partnership with Disney on NFTs too. So definitely keep an eye out on MUDs for tops. And then, as I said last week, the Coinbase IPO will be the big story this week. So keep an eye on VIH, which is bringing Backed public, which is a crypto play as well. I think shares are going to move higher in sympathy. And then DMYD, Genius Sports, they have their vote set for this week. Remember that huge news, that exclusive partnership with the NFL. It looks like it's going to be for 6 years. The NFL will own around 5% of Genius Sports after the merger goes through. So the NFL is betting big here on Genius Sports. And not only are they going to control that data for sports betting companies, but Genius Sports is also going to be able to license and partner with sports media networks, which is a huge, item to keep on watch as well. So those are 3 top SPAC stocks that I'm watching today and this week, Mitch.
Yeah, definitely. There's some plays out there I'm keeping on radar. Buds is having a good day, man. It's up 8%. So, those are the trades that I definitely want to keep an eye on, and we'll see how they go ahead and keep moving. Definitely, guys, we got some great interviews left for the week, like we always do. And if you guys have a SPAC that we haven't gone after and you want us to go after, let us know in the comments below. That's how we go ahead and get Sharecare, like you see over my back. And we're going to keep going after these SPACs. So if there's one that you guys want, let us know in the comments below. And like always, guys, hit that share button. Let everyone know where the SPACs are back. And I feel the bottom is in. So definitely it's time to pay attention again. It's time to let everybody know. If they haven't heard about SPACs, now's the time definitely to get them on here. So we'll definitely pay attention. I want to give some shout outs to everyone that's in our chat. We got a whole lot of people that stick with us every single day. So I wanted to give a shout out to Carl out there, Franco, John Doe, Rick House, Adam, Sam Broski, Hack Mom with some good information. Man, in India, we got also Tony in the house. We got also Born to Be Free, Daryl, I appreciate you guys sticking with us every single day.
I see Brian Blockchain with a comment just now. I know I see that name in the chat all the time as well.
That's what I like to see.
There's the Blind Trader, guys. If you missed it, the Blind Trader was interviewed for one of our other shows, First Trade. I know I watched that, Mitch, and that was a great episode. So I love that one. So shout out to you, the Blind Trader. Daryl asking about SFTW. Go back and watch our show from, was that Thursday? I think it was Thursday, where Mitch shared SFTW being, one of his top space stock picks. So definitely go back and watch that. You got some detailed insight there.
Yeah, guys, check it out, guys. We're going to be coming at you guys hard. We're going to be bringing some great interviews. So definitely let us know where you guys can see the SPACs attack. And also, hey, if you guys want to come on, reach out to us. If you feel you got a SPAC portfolio, you want to go ahead and bring on SPACs attack.
Yeah, let's do it, guys.
Let us know. We'll go through it. We'll run it through it with all the team, because at the end of the day, guys, we're in this together. And if we're in this together, we might as well help each other out when we find information or make a trade that we feel, hey, I got some edge here. Let's talk about the information. Let's get the information out there to everybody else so that they can make their own decisions, guys. All right, guys, that's going to be it for us. The Power Hour should be on right now. Let me see if it's on. I'm just going to check right here. I'm going to refresh here. Looks like it hasn't started, so I'm going to wait a second here until it gets kicked off. But like always, guys, definitely stay with us. If you didn't catch, of course, our great interview with Gary Vee, you definitely missed out. So if you're an NFT fan, art fan, or just a Gary Vee fan, or Matt Higgins, if you like Sharks Attack, if you like the Shark Tank, then check it out, guys. One of the great things is they didn't only tell us about those things. They also let us know some of the real mentality of how they get to where they get to. So check it out, guys. I know that was a great interview.
Yeah, and for all of you asking, about Topps and that Muds deal, we were able to ask Gary Vee and Matt Higgins what their thoughts were on Topps. And of course, Gary Vee, a big investor in sports cards right now. So he actually shared some ideas and ways that retail traders can play the boom in sports cards. So go back and watch that interview if you missed it. It was one of my favorites that we've done here.
All right, guys, let's go ahead up and get to the Power Hour. If they haven't started, it's going to be on loop.
I don't think they've started. I don't see that video going yet.
Well, they're sleeping, man, because the SPACs is over, and we're wrapping up, and we'll see you guys next time.
Bye, everyone.
SPACs Attack. Let's get it.